Welcome to the Fintech One-on-One podcast, episode number 297. This is your host, Peter Renton, chairman and co-founder of Lendit Fintech. Today's episode is brought to you by Lendit Fintech, the world's largest digital media and events company dedicated to all things fintech. Lendit Fintech offers programs throughout the year to the fintech community, such as engaging webinars, white papers, a weekly news show, a daily newsletter, and our newest offering, Fintech Features, a program that helps fintech companies amplify their announcements. Find out more details on all these offerings at lendit.com. Today on the show, I'm delighted to welcome Sam Sidhu. He is the Vice Chairman and COO of Customers Bank, and he's actually going to be CEO starting July 1st. I wanted to get Sam on the show because I think Customers Bank is just a super interesting bank. They're sort of a large community bank, sort of small regional bank, but they have leaned into technology like few other banks of their size or even larger banks have. And this has been demonstrated by the PPP. They've been involved in all three rounds. We talk about this latest round in some depth and how they really applied technology to help process loans for many other banks as well as fintechs. So we talk about that. We talk about the SBA and how they are going to have an end-to-end SBA lending product that will be stood up after the end of the PPP, something that has really been, sorely missing. And we talk about the role of branches and how Sam sees that. They have a small branch network. And Sam gives his vision for the future of Customers Bank when he becomes CEO. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Sam.
Thanks, Peter. It's great to be here. Thanks for having me.
My pleasure. So I like to get these things started by giving the listeners some background. I mean, you've had quite an interesting career to date. Why don't you tell the listeners some of the highlights?
Sure, I'd be happy to. So first and foremost, to go back to the beginning, born and raised in Pennsylvania in a banking family. And now, believe it or not, both myself and my sister are also following in the banking and fintech space. My sister, Levleen, is the CEO of BM Technologies, and I think she's been recognized by Lendit in recent past as a FinTech Woman of the Year. But also, stayed in Philadelphia area for college, went to University of Pennsylvania, studying at the Wharton School. And after that, really started my career in tech media investment banking, first at Goldman Sachs, and then joined a private equity firm called Providence Equity, again, focusing on the same sectors. So I've had a long journey, which I'll talk a little bit about through many, many different sectors. But, first at Providence, worked in the US headquarters, but then moved to India as well. So got some international experience. And that's when I decided to go back to business school and really where the entrepreneurial angle and some of running my own businesses really started. So I started a real estate private equity firm called Megalith Capital Management. It's really essentially a fund manager, which is what I've been doing, for the last decade before joining Customers Bank last year. So fast forward, $1.5 billion portfolio, mostly New York City properties with over 1 million square feet of development. So we became a fully integrated operator as well. Also along the way in 2018 in parallel, launched with some partners a SPAC, focus in the fintech space and sector, which now everyone knows what a SPAC, is. A couple of years ago, we were the third fintech focused SPAC at the time. I think someone told me a number. I don't know if it's accurate, that there's something like 36 fintech focused SPACs, active right now. I think it's directionally believable. But, as the CEO of the SPAC, while also running the real estate platform, I had an opportunity to meet and in many cases bid on, hundreds of companies in the fintech sector. Right. And interestingly, all roads led back to the bank charter. And that really brings me to Customers Bank, where I joined last January as vice chairman and chief operating officer in January pre-pandemic. And, goes without saying, I got to say, most importantly, my wife and I are the parents of two beautiful young girls.
Okay, that's great. That's great. So before we dig into Customers Bank, I do want to ask about the SPAC and the Bank Mobile spin-off out of Customers Bank. Tell us about that spin-off and what that process was like.
Sure, absolutely. As I mentioned, earlier, our SPAC pipeline, brought us full circle, back to recognizing the bank charter is really where the value is and where the ecosystem needed to be built. And frankly, many of the fintechs were just circling the charter and in some cases, or in most cases, were overvalued for the products or business lines that they were in. So there's a little bit of supply-demand imbalance. The companies that we, as the SPAC managers, were most attracted to were either powered the banking and fintech ecosystem, say like a Plaid, or those that powered the customer acquisition and customer experience, like a Bank Mobile, now called BM Technologies. So last year we decided to consummate a deal with Bank Mobile, which is a subsidiary of Customers Bank, and what is a SPAC 101 deal. It's what the investment bankers that pitch you on the IPO say, pulling out a divestiture of an undervalued asset within a larger company that needed to be sold for idiosyncratic reasons. And in this case, Customers Bank had crossed 10 billion. A large portion of Bank Mobile's revenue was based on interchange swipe fees, and that was being reduced as a result of crossing 10 billion. So it was an interesting transaction. The deal closed earlier this year on January 4th, and Bank Mobile Technologies now trades in the New York Stock Exchange, and as the first challenger bank. It's really a B2B2C type fintech in the US.
Right. And we've had Loveland on the show before. I'll link to that in the show notes. But then just before we get going, though, one more word about SPACs. I mean, you were early on the SPACs, as you said. You were the third, and now it seems like there's a new SPAC that's being announced almost every week. I mean, it seems like it's died down a little bit in recent weeks, but there's this SPAC mania that has sort of gripped fintech. It feels like in the last 6 months. What do you make of that?
So at the end of the day, you have to remember that there's first focusing on fintech. There's a lot of private capital that has invested in some very successful companies and industries in the fintech space over the past decade. So there is a need for liquidity, and to going public is a great source of liquidity. Yeah, and there's also been a maturation in the technology cycle. From a SPAC perspective, a SPAC is a great tool. It's not a one size fits all for every company as an alternative to an IPO, but it can be very attractive, especially when there's a win-win on both sides, where there's value add on both sides. If a company can go public on its own without any hiccups and doesn't need any sort of specific reasons to partner with a SPAC, it probably should. And a SPAC transaction doesn't necessarily make sense. The SPAC mania that's going on right now, where SPACs, just based on the management team, are trading at a higher value than their trust liquidation value. Right. That's something that has to eventually end. So rationality will come back into the market. I think we saw the opposite of this, where SPACs were trading at a discount to trust value in the financial crisis, which also didn't make sense below cash. So I think that there'll be sort of a swing back, but I think at the end of the day, they can be a very attractive tool for the right situation.
Right. Okay, so then let's talk about Customers Bank. It's a very interesting bank. You've got a great story, but maybe just how do you describe the bank today, so the listeners have a good sense of it?
Sure, absolutely. So Customers Bank is just over a 10-year-old startup bank that has now grown to 18 billion in assets, and really it merges the established expertise of a regional community bank, but with modern offerings and the platform of a technology company. Fostering the creation and innovation of Bank Mobile as an example. And really what we're doing at Customers Bank is we're designing a bank of the future that's at the intersection of community banking and tech or fintech, but doing so as one of the top 100 largest banks in the country, which makes us very unique. We have community banking in the Northeast in a branch-light format. We have only 12 branches, which is basically the same amount of branches as when the management team acquired what is now called Customers Bank in 2009. In addition to C&I lending and deposit gathering on the commercial side, we have national businesses like SBA, banking mortgage companies. Last year, interestingly, we funded 2% of all mortgages in the U.S. Wow. Lender finance, fund finance for private equity funds and venture capital firms, real estate specialty lending, equipment finance, and multifamily. And on the consumer side, which represents just over 10% of our book today, but it's growing, we have sort of acquired that portfolio, or rather acquired those customers almost exclusively through digital means. Right.
Okay, yeah, let's talk about. I want to dig into the PPP because I know you were a big player in that program. But maybe before we do that, can you give us some sense of beyond the PPP, what has the last 12 months been like at Customers Bank?
Sure, absolutely. Talk about I joined in a whirlwind of a year. I joined at the end of January.
Right.
It was a whirlwind year for everyone, but for me personally and for the bank, I had 6 weeks together in person, joining in as a senior executive before we all went into lockdown. So first we started, as many banks needed to, started by triaging the portfolio, looking at the known and unknown risks. We also, worked on establishing and onboarding a new technology monitoring and portfolio management tool to assist. We then also, I shouldn't say we then moved to, because all of this was going on at once, So
right, of course.
we then significantly increased our investment portfolio. So we allocated cash in a way where we otherwise didn't have business as usual type opportunities, but also we were quote unquote a balance sheet or lender of last resort. So there were huge interest rate moves and lack of liquidity in the market. And we doubled or more than doubled the size of our investment portfolio over a period of time. Most of it happening in March of last year. So in hindsight, those trades look incredible now, but at the same time, at the time, it was, very tactical and very thoughtful, and then we'll talk about PPP, but beginning on March 27th, 2020, a date that will be ingrained in my memory forever, we pivoted to PPP and started helping our customers first and then inbound customers while we opened up a digital portal. And then we helped, small, medium-sized businesses and importantly, micro businesses around the country. And in 2020, PPP, we ended as a top 5 lender with over 5 billion of loans. PPP ended in August 8th of last year. And towards the tail end of the summer, I started evolving my management role. So I took on a number of key direct reports by the end of the year and have assumed most of the operating responsibility that I have today. So that was sort of a return to business as usual for a period of time. And then by December, we had PPP 3 launched. And on the heels of record earnings, record quarter for the year, the revenue grew 40% for the year, earnings grew 80%. And we have expectations that will continue in 2021 with momentum into 2022. It's really just, I feel very fortunate to have such an incredible team to have pulled off that feat in such a difficult time. So, but really it's all thanks to leaning into technology.
Yeah. So I want to actually think about that in the context of the PPP, because, you said you've done 3 rounds and, and we chatted earlier this year and you talked about the 3rd round of PPP and how you were approaching it a little differently, but maybe just give us some sense of what you learned from sort of round 1 and round 2 and what you applied to round 3.
Sure. So, I think first it's important to have the lens of the borrower. So the borrower now had a 25% revenue reduction test in 2021, which really reduced the number of loans, the demand for loans, but it really focused and targeted on the folks that needed it the most. So you had a little bit less demand, but there was high volume of smaller loans. So less dollar demand, but still a large demand. From a lender perspective, lenders had fatigue and didn't really want to participate anymore. There's industry groups, some lenders were focusing these PPP TSD, post-traumatic, stress disorder for PPP. I messed up the acronym there, but additionally, I think what the SBA and Treasury did is they also worked to make sure that there was now a minimum fee for loans. So there's a $2,500 minimum fee. So from the customer's bank perspective, how do we sort of pivot? We did a couple of things that really made this, that allowed us to lean in more. So, firstly, we talked about this. We built a hybrid model that really brought together the best of fintech and community banks. So we had a strong use of technology to gather and process applications. We backed it up with experienced bankers with a human touch, to work through problems. And we expedited, our closings with experienced partners and loan servicing and PPP loan forgiveness, all using technology. We also were very agile. So unlike many of our biggest competitors, we're processing more loans today than JP Morgan and Bank of America. We have only a 500-person team, but we were able to pivot quickly using technology. So the SBA comes out with new rules within 24 to 48, maximum 72 hours. It's embedded into our technology and our customer journey. And I think that type of agility really allowed us to flourish. And really, I think that at the end of the day, the ability to white label our technology, which we called PPP as a service, really helped fuel, our success. And most importantly, our success is the country's success, because our loan size right now is $20,000 approximately, more or less. So when you think about that, this was a 10-week type program. You're talking about payroll of, $8,000 or so, right? So these are, this is a 1, 2, 3 person type, types, either sole proprietor or very small micro businesses. And they're the ones that are really most impacted by the shutdowns.
Right. Right. Well, I want to talk about that for a minute, the white label program, because I know that, that was, it sounds like you went out to other banks, you said, who had PTSD from the PPP previously. But then I also saw you're working with other fintechs. Can you maybe talk about the types of partners? And if there's anything that's public, you could name names about who you worked with?
Sure, absolutely. So as I mentioned, we built a white label PPP as a service model where CDFIs, minority deposit institutions, but also non-lenders like nonprofits and chambers of commerces around the country were able to use our technology by the creation of a landing page with their logo, their branding. It had the look and feel of a nonprofit or a lender or a bank's PPP platform, but we handle all application processing. We handle borrower intake, borrower questions, SBA submission, loan funding, loan servicing, and we will handle, forgiveness as well. So we did this with an entirely, dynamic tech platform. So now in terms of partners, we publicly disclosed last year, we had partners like Cabbage on deck, but we also have marketplace lenders like a Lendio and an Intuit, but we also have referral partners, say like a Womply. And on the banking side, we've had hundreds of banks send us loans, including a top 5 bank in the country who's sending us release valve loans. I'd call it overflow type loans. We also have a $50 billion bank, several banks over 10 billion. And really, this is what this hybrid banking plus fintech approach is really what helped cement our position in the industry, and also, frankly, with the SBA, who's very appreciative of our involvement.
Right. So let's talk about the SBA. I mean, because they, initially there was, they had a very difficult challenge that was talked about a lot last year, but obviously they had a lot more time to prepare for round 3. We all suspected round 3 was coming. And so how has it been dealing with the SBA this time around compared to in 2020?
Sure. So the timing could not have been worse from an SBA perspective, because you had sort of Congress and the previous president, sign this, the PPP new top off at the end of December. Mm-hmm. And then you had this is post-election, a new administration coming in early January. And the program launched just days before the new administration. Right. And believe it or not, the political appointees all left at noon, the day of the inauguration. So there was obviously a little bit of transition that lapse that couldn't have been prevented, because frankly, that's just the way that the government works, especially with the new administration coming in. But taking a step back, I think that the SBA, just like we learned at Customers Bank, the SBA is also learning that through the use of technology with the right controls in place for fraud and also need determination and a smart credit box, and this can go beyond PPP, that banks like Customers Bank can really help achieve the SBA's mission, and we continue to plan to do so. So one of the challenges and the knocks that the SBA has been in the front line of has been sort of fraud in 2020.
Right.
And I think that may have resulted in the pendulum swinging, a little too far, but we also think that the fraudsters have figured out how to potentially game the system of last year, and that wall really needed to be put up. So there were some technical challenges, for the first couple of weeks and months, but those have all really been worked out, and things are moving very smoothly right now. And I think that we are, confident and hopeful that the new administrator will be leaning into, SBA programs beyond PPP, like 7A. And, at Customers Bank, we are actually launching a digital 7A, program this quarter, which is an end-to-end, fully automated process where we source a customer online, we fund it within 30 days, and we bring in a customer to the bank, which is really unheard of in the industry and in the SBA.
That sounds great, because the SBA and the 7A loans, a lot of small business owners want them, but it's been such an onerous,
That's right.
way of kind of putting in that loan. So then you were an SBA lender beforehand, right? You did have a relationship with the SBA.
That's right. We're a top 100 lender, in the country, and to give perspective, the top lender has about $1 billion of PPP loans. Of
right.
SBA 7A loans. Right. That are originated every year on a typical year. Last year was obviously a slow year because of PPP. Mm-hmm. So we have ambitions to really increase that through the same hybrid model, the manual, relationship-based business development officers around the country, along with the digital platform. And frankly, since we've now brought in hundreds of thousands of PPP customers to our bank, we're going to lean in with the next product that they're likely going to need, which is a lender. The SBA sort of is meant to be a lender of last resort. So a lender of last resort type financing with a government backing, which is now up to 90%. So we do anticipate that in a post-PPP world, the other SBA programs will also be, very attractive as the economy continues to recover.
Right. So, the PPP is still going on. I mean, we're recording this on April 19th, and I know the PPP got extended. Are you still seeing demand from small businesses today for PPP loans?
Yes, we are. In fact, it's just as large as it was at the beginning of the program in
Really?
mid-January. And the reason for that is at the end of February, there was a change to the Schedule C filers, the sole proprietors or independent contractors, whereby as opposed to calculating payroll multiplier for the sizing of the loan off of net income, it was done off of gross revenue. So as a result, a lot of Uber drivers, fitness instructors, yoga, whatever it may be, they now have an ability to get a more sizable PPP loan. So those changes have only been in effect for, call it 4 to 6 weeks. And, we have been processing more or less about 20,000 loans a week since then. And, we recently took over, as I mentioned, Bank of America and JP Morgan. We're number 4 in the country right now in terms of loans. To date, we have, including last year, we have done about just under $9 billion of PPP loans with nearly 300,000 loans, which is about 1% of all PPP funds administered.
Right. Wow. So then are you finding most of these customers coming through your partners, I imagine, rather than direct to Customers Bank?
So it's actually, first round last year, it was majority through partners, or, origination partners who were helping us source customers, and in some cases help us package and do the initial packaging. This time around, our direct originations are majority of the loans that we are processing right now. So, we haven't publicly put out the numbers, but we will probably in the next week or two as we have our earnings come out. And I think it'll be an interesting story, and also a testament to how we've pivoted and how we've, modified the way that we do business, and not just repeat what we did last year, but actually significantly outperform.
Right. I know when you go to your homepage on your website today, it's all about PPP. I mean, that's that's really what the focus is, it seems. So then, do you, given your kind of perch in this system, I mean, I'd love to get your sense when you're talking to the small business owners, do you get a sense that this round 3 has done what it's intended to, and has been a successful program?
It's a really good question, and I get this question asked all the time because we were big proponents of the extension from March 31st to May 31st that just happened. Right. So we're talking to senators on both sides of the aisle, Congress men and women as well, and they're asking for data and detail. And absolutely, I think that the revenue test was a very important test, because last year I think there was a rush. It was an unknown. People didn't know how long we were going to be shut down, and there was a bit of insurance planning or bridging through the pandemic that happened. And I think this time that it's a lot more targeted. And the loan size for Customers Bank is small, but it's also significantly smaller for all banks and all lenders. Right. So I think that shows that it's targeting those most in need. And I think that if you look at some of the data, small business closures were expected to double during the first year of the pandemic. In fact, they only rose by 25 to 30%. So I think just by looking at that, largely, the banks like Customers Bank that had a very quick pivot and speed to market really helped with that, and really helped administer the goals of what the SBA and Treasury and Congress were seeking to do.
Right. Okay. So I want to ask you a question about banking in general, because I said you are this sort of hybrid type bank. You've got a very strong technology focus, but you also have a branch network, albeit a small branch network. How do you kind of thinking about that, branch banking, shall we say, post pandemic?
Sure. So I think it goes without saying that the pandemic has globally accelerated trends, which were already gaining momentum and was part of the vision, I'd call the pre-pandemic vision. It's a little interesting to think that a vision you had 12 months ago is completely changed and accelerated by several years. Mm-hmm. But digital banking, digital customer acquisition, banking as a service, all of these trends, have accelerated in a tremendous way. I mean, branch banking, the need for branch banking has always been there. For folks like to drive to their corner bank, meet, press palms, look folks, in the eyeball and do business, especially cash transactions. But it's more out of convenience and consistency. And branches have always been cautious to close branches for fear of losing those low-cost sticky deposits. But I now think that, Customers Bank is, we've closed a couple of branches, but that's off of a very small base. So you can't really look at percentages, from that perspective. But I think that branch banking, the acceleration of the end of what will eventually, end, in the way that it's done today has started, and it's going to accelerate. You will need financial centers where you can still meet your relationship managers, and in some, limited cases need to do, cash transaction. But, from a small business perspective, which a lot of those relationship experiences get done in branches as well, PPP was a highly digital experience for everyone, even if it was just a digital application, as opposed to a total digital end-to-end automated experience like it was for us. And we think that these experiences are going to help break off the rust and create some inertia. And I think that small businesses and consumers are likely going to consider digital-first banking relationships in the future.
Right. And so it sounds like you're positioning Customers Bank to really take advantage of that. I mean, you've sort of leaned into technology and you've got, so the end-to-end PPP. So do you feel like the future for Customers Bank then is a digital first approach, it sounds like?
I would sort of qualify that by saying, we've always said, going back to the bank's first capital raise prior to my joining in 2009, 2010, when it was acquired by the management team, it was, high touch, supported by high tech. Mm-hmm. And I think that holds true for our single point of contact relationship-based model. Having said that, there's a new branch on our strategy, which is the high tech supported by high touch. And that's a digital first customer. And I think that's a smaller percentage of our overall customer base in our balance sheet today. But as you can imagine, that percentage will rise over time. So it's not a change in strategy. It's just that we're adding, a new branch and a new customer acquisition strategy that will grow significantly over time.
Right, but the PPP borrowers would have been nationwide, right? I mean, they're not sort of focused in a geographical region.
That's right. They're nationwide.
Right. Okay, so for you, serving those customers is going to be digital first. It sounds like.
That's right.
Okay. So we're running out of time, but I want to get a couple more questions in here. I want to talk about small business lending specifically, and you talked about I'm putting up a 7A program that is more digital, but I'm interested more on the demand side, and when it gets to small businesses. The PPP, I don't think there's going to be around for. Anything's possible, of course, if we get a relapse of the pandemic or something. But assuming the PPP is over for good on May 31st, what do you see in small business lending? How long before it looks like it did in 2019 as far as demand goes?
Sure, it's a good question. I think that the pandemic has, from a bank perspective, has highlighted the importance of balanced industry exposure, and the restaurants, shipping, retail, they are going to take some time, to recover. And I think that, having said that, I think that there are green shoots everywhere, and I think that the vaccine deployment has been faster than people have expected, and I'm very hopeful that there'll be a quick, a quick rebound, which will allow some businesses to have some stability. Having said that, people have incurred debt, they have rent, they have costs that they could not turn off. Commercial landlords have a reckoning to do over time. So I think that we'll start to see, as I mentioned before, government-led type small business, micro business type lending. Having said that, on Customers Bank roadmap is to have digital first, term loan, working capital lines, et cetera, so that we can truly offer those digital only credit experiences, in the coming quarters to be able to serve the needs of the small businesses that will likely need those types of products and services, and frankly, feel more comfortable using a digital only relationship for those types of products in the future.
Mm-hmm, mm-hmm, mm-hmm. Okay. So then I was reading earlier this month that you have been appointed CEO of Customers Bank effective July 1st. So would love to kind of just get a sense. I mean, obviously, you've still got a couple more months before that happens. But what are your plans for the bank when you become CEO?
Sure, it's a very good question, a very interesting question. I would say that the bank had a strategy, and they brought in the talent to help execute the strategy. And the intention is that I would eventually take over, but it happened sooner than expected. And the vision is the same. It's we want to build a highly successful bank that makes our customers say, "Wow." The mission or the path is going to continue to evolve, which in some of the ways that we talked about during the podcast. But we want to really ensure that our commercial clients have all the products and services that they need, so that they can self-serve and that they can self-serve as much as they need. One thing that we learned during PPP is that many of the small businesses, they have a top 5 bank account. They have a community bank, like a customer's bank account. And then they have a Square or a Cabbage of, on deck, type account. And I think those need to converge. And I think that's really where Customers Bank, is seeking to go. We want to make sure that our consumers and our small, medium-sized businesses don't need a JP Morgan or a Bank of America for some small, large corporate or FX type transfer or something unique. We want our digital experience to be better than that of a top 10 bank, so that we can really own the primary banking relationship. And I think the benefit of being small without legacy technology, legacy branch network holding us back, allows us to be agile and actually compete the way a fintech might compete against some of the large banks. And I think that so we'd like to own a primary banking relationship. And then once we're successful on starting to be successful in that goal, our medium to long-term vision is to add other financial services, products and services like wealth management and insurance, and seek to then own the primary financial services relationship. And I think that would be how we really define, long-term success. But if we can achieve, most, if not half of that roadmap, I think all of us would be ecstatic.
Right. Well, it's certainly, it's an ambitious agenda. And I wish you all the best, Sam. It was great to chat with you. Thanks so much for coming on the show today.
Thanks, Peter. Thanks so much for having me.
Okay. See ya. I think Customers Bank really is showing the way of the future here. They're not a large bank, they're also not a tiny bank, but they've embraced technology while still maintaining their community involvement and the potential and the availability of in-person, face-to-face banking. But the technology side of the business is something that, as you can tell by listening to Sam the last half an hour, that really they have focused on. They have made it so that it's a competitive advantage for them. And, whatever happens in their branches, they want to be a tech-centric bank. And I think that's a model that many other, smaller community banks and regional banks are going to seek to emulate. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was brought to you by Lend It Fintech, the world's largest digital media and events company dedicated to all things fintech. Lend It Fintech offers programs throughout the year to the fintech community, such as engaging webinars, white papers, a weekly news show, a daily newsletter, and our newest offering, Fintech Features, a program that helps fintech companies amplify their announcements. Find out more details on all these offerings at lendit.com.